Right, so Tuesday's trading session, Australia, Asia time, it's just finished. Europe will be opening shortly. The US later on tonight. Here we go. First impressions, right? Just this bit of a recap for those that didn't see yesterday, right? Bit of a recap, right? Broken. That's the first impression. Next one. Target. Okay, that's pretty much third thing. This pretty much sums up, the Australian market like in a nutshell. Last thing, overbought on the dailies, turning. Right? So as I said, I'm short, and that's the way I'm playing it for now. You can see when I look at it, when we kind of go from that nice area thing back to the candlesticks, we get a bit more detail in there. When we go down to the 4 hour, which is the way I like to trade it, you can see how it's broken that, come back to retest it. Next thing is that is a critical thing. If it breaks above there, well, first of all there, but certainly if it breaks above there, then the bear story is OVAH, as they would say. You can see that's that trend line that I drew going back to the pre-pandemic high. You can see that it's really having a bit of a lash at that. If you just adjust it there to nail it there, it's right on it, right? There was a resistance, support, breaking through, boom, boom. To me, it does look like it's going to go down. Watch this space very carefully, though. Other impressions about the target. Here, that's a fair way down. That would be really quite disastrous for the Australian market. I guess the other level here is in here. That's the other target that I've got in mind. If it breaks this one, as you can see, there's thin air to come back to here. That would be that'd basically be 10% like on the knocker, really, 9.4%. Right, there we go. That's a good correction. It will no doubt line up with the Fibos. If we kind of take out a bit of the noise down here, right. That's right in that. Yes, it's right on there. That's the 23.6 retracement for the Fibo, right? I do take out the noise here, right, because that was, that's just the long leg. Kind of take out there, but you can see for it to come back to there, very, very within reason, and where it came back to after these highs, that's where it came back to, right? So for it to come back to there, if the correction continues, very strong probability, I would say. As I said, nice double top, come down. If it breaks here, then I'll take my deep breath in there, but it's certainly not without question. They're very likely. Let's have a look at the. I won't even bother looking at the cash market. Let's look at the S&P. Again, let's go back and look at some first impressions. I don't know what's doing that big gap there. It's this crappy website that I'm using here. So first impressions, right. The first thing I kind of looked at was this, overbought, turning, similar to our market. Next one, boom, 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 boom. Yeah, right. Same thing as our market. Touch, broken. The next thing I'll look at, I'm seeing is this similar thing, this level in here, somewhere in there. That'll narrow down when we look at on a smaller time scale, but there is definitely this 4,000 level somewhere in there. Let's have a look at on the 4 hourly, the way I like to look at these things. Let's get a bit more color in here. Right, so you can see with the 4 hourly, like it gives you a little bit more color. So this range gets narrowed, so we are looking at that gap precisely there, which is like in like 4,000. This trend line, yeah, you can see how it I'm only just drawing this right now, right? It's turned, went, come back. That is really a very bearish signal. I'm short the S&P as well. This obviously is the level to watch if it breaks. The other thing is to look as far as targets is the old the FIBO extensions. Well, coincidentally, that one, if it was like a 1-to-1 on that move, it's right at that level. Very realistic target. I'm expecting it very high probability, I think, for it to go there. I'd say that probably if it going there is higher than it breaking there. Buy this for education only, people. This is my views. This is my trading diary, right? I'm not giving you investment advice. This is the way I'm just educating you as far as how I see the market. The 1.6, is takes us to that level there. That's if we'll go back to the Aussie market. I reckon we'll see that as well. I'm pretty sure. Let's see where this extension takes us down to. Let's take it from there. Right, yeah, it takes us to that 6,800 level. 68 through there, like there. That's what I've got in mind. If we just take out some of the noise here. Let's take out some of the noise there. Go for there. Let's see where that ends up. Yeah, it certainly takes us down into this region here, and the retracement that we're looking at on the big move. That 23.6. That's right in that 6,800 level. That's a level that you've probably heard me talking about before, and the reason why it is a bit gravitational in my mind is because just here, that was the high that it then came off on, and it really does. That's the level where it struggled here, did a bit of a turn. To me, that looks like where it could really, go back to. If you fiddle with this, right, you could probably make it fit there. Take it up to there, I don't know. But it certainly is in that range. To me, that looks quite likely. Let's look at the currency. Right. Let's go here. Yeah, right, okay. So first thing I'm seeing is this. Boom. All right. Bit of movement around there, bit of movement around there. Right, to me, that looks pretty, as I said, pretty gravitational. The Aussie, if you look out on a longer time frame, this is going back quite some time, you can see really that when it's around 80-ish, that's 81 cents, when it's around this 80 band, it's a sell, right, typically. When it's around this, 60 band, right, it's a buy, most of the action is within here. Didn't last long there. Didn't last long here. That one was quite different. That was like the whole, when oil was going to like, a gazillion dollars, right? Commodities boom that basically bailed Australia out after the GFC. So this, to me, is still looking like it's on its way down, but it is still slightly in no man's land. And let's go down the 4-hourly and have a look at it there. Yeah, this is the level that strikes me, and that is the one to watch. If it, this one, touch resistance, bit of noise, it's come back here. That's the one to watch that I've got my eye on. I'm still a little bit short here. And there's a few reasons. I think the housing situation in Australia is under the microscope on the back of some of the moves from the regulators today, APRA, and obviously Evergrande being, topical, and the IMF's comments about Australia, and I think that will weigh on our market. That is slightly offset with the commodities story with iron ore recovering. But again, what happens out of China may certainly dampen demand for iron ore and some of our commodities. And that's why we're having a bit of an arm wrestle in here. I re-shorted it, like up here around about 73, and hopefully, fingers it'll bounce. It's certainly had, if nothing else, it's a bit of a range to play there. And lastly, the bonds. I'm not tracking the Aussie and the US bonds correlate pretty highly, right? There's a bit of a spread between them, but you look at one, you might as well look at both of them, certainly at the moment. And this is, really what's been going on here long term. Obviously there's this, right, which is like from all the way down there. It's, you can draw it up there, I don't know, right? But it's certainly one-way traffic. You've probably seen this before, the ratcheting effect. That's definitely a target there, which is where it hit, before. This is obviously the lower bound here. Now that ratcheting effect, you can see it there, you can see it here, the way it's broken that and come back across and hit it again. You can see it here, where it broke it, came back again. You can see it, I guess you can see it here, where it bounced off there and it came back, and that was the resistance. It kind of does happen, time and time again, particularly in these bonds. Happens in other markets, but especially the bonds, just as the market gets the rate cut, re-leverages, everything recalibrates, and it limits the Reserve Bank ability to raise rates. It's like the crack cocaine, right, of financial markets. Obviously, big, strong move up, and it is, that's the level that I had as an initial target, and it has screamed through that very strongly. So if it keeps going, it's going to be interesting. The next stop for it is here, where it broke down from. Don't know what happened to that line. Let's try it again. Yeah, there it is. That's the next level, another 20 points. Well, no, that's only 13, 14 points. Now, if it hits that, that's interesting because it starts breaking this trend line. Look, that's it for this afternoon. I guess the last thing I'll show you is in the cash market in the US. One of the things that one of my hobby horses is people who only look at the cash market and they kind of forget about the futures. Now, the US futures, they started selling off at the close of Asia, opening of Europe, right? Now, if that's what you had to deal with this morning when you came in the US, if you're not looking at the futures overnight, there's another one here, right? Some people have these stupid conspiracy theories saying this is Wall Street playing games. It's not Wall Street playing games. These are global financial markets. The emphasis being on global, right? That's like a 0.5% gap that you've got to deal with. That can be a lot of money if you've got an overnight position on and you're just flying blind. Similar here, right? These are sizable gaps, right? And they followed through. So it's not just Wall Street playing, silly buggers. If you run a derivatives book in these markets, you've got core levels set around the clock. Trust me, I know it. That's what I used to do when I worked at the bank. So that should be, I would hope, a lesson. You can see these gaps, they're everywhere, right? Look at that, the gapping risk, right? Again, if you're only looking at the cash and you're not watching the futures, you're seeing a third of the price action. I don't know why you'd do that, to be honest. Some people do. Anyway, but you can see I've been short the US here. And where I shorted it was like 44.36. Actually, I think it might have been higher. Just look at my notes. 44, yeah, something like that. Yeah, something like that. Sort of 44. It's up here anyway. 44.45. Hang on, let me check. 44.34 and a quarter. So I just look at my spreadsheet over there. That's where I shorted it, right? Which is a great level. The reason I was able to do that was because I was looking at the futures market. Anyway, as I said, this is just for education. I'm not giving you investment advice. Treat it all with care. Be very careful. You can dust a lot of cash in these markets if you're not careful. Look, that's it. Have a good day. Catch you later.